Hi everyone, Matt Pohl here from the Traders Pulse podcast, and I've got an exciting episode today that specifically goes over the real estate market. Now today, we're not just going to go over some things that happen in the news or some basic things in real estate. We are going to be going over some of the hottest tips and charts that are the most relevant than any other place. In fact, this is my little hidden gem in terms of a data source for making investments nationwide, and I'm giving it now to the public for free. So what you're going to get by watching this episode is free access to my personal spreadsheets, the data that I get live, and you will likely be a week ahead of even your real estate expert friends that think they know everything about the market. So like, subscribe so that you guys can stay tuned, and I'll be doing this every first Friday of the month. So let's just jump right into things. So I'm calling this our Real Estate Forecast Friday. And I've done you guys a huge favor. I put the link in there. I don't expect you to type it in. That would be a little crazy. So what I did is I created a QR code. Just go to your phone, get the camera ready, hit your photos, and just hold it right over there. Click on it. And then when you click on it, it should take you right to the charts. And I've made these public. You obviously can't edit them. But guys, I've got like almost 15 tabs on here that go through, everything from listings of homes, median house prices, anything and everything you could possibly want. It's here, and now you have access. So this is a great chart if you have any interest in the real estate market, or you find yourself as an investor, or maybe even a first-time home buyer. So let's go ahead and get our disclosure going. Again, scan this, guys. If you want free access to this chart, you can save it as a link. I will be updating it the moment I get the data so that you'll have the most relevant real estate data compared to all of your friends. All right, let's go ahead and roll the intro and we'll get started here. All right, guys. So here's what we're gonna do. I've actually, for those of you who may have come in a little late, or for those of you who are watching this live, what I've done here is on the far right, this is the QR code that you can scan and save anywhere on your computer or your phone to get access to these charts. But these are hot off the press. And let me just show you really quickly what we're actually dealing with here. So if you look, this is the data. This is the data that I absorb. I put in, there's a lot going on here, as you can tell. I do not expect you to go through this. I've been doing this for over 5 or 6 years, watching these charts come in. I don't expect you to understand it from this perspective. And there was a time that this was all I read. And then I got clever and I created one chart. And I think the first chart that I ever created was this one right here. And it was the mean listing price. I just had an interest in, like, nationwide, what's the median listing price happening in the country. And so this data that's coming in, we get every month, and I typically get it about the 4th or 5th day of the month. So once they've aggregated and audited all the data, they push it out, and I'm one of the first ones to get it. I load it into this sheet, and then it automatically builds all of these beautiful charts that you guys are gonna get to see with me today. So what I'm gonna do is actually make sense of this. Obviously, if you like what you see and you want to be on these every first Friday of the month, just go ahead and when you're in the chart, you can click our link to the Trader Pulse podcast, or you can scan this little QR code to get subscribed to our Trader Pulse podcast. And then if you like, you're welcome to follow me on LinkedIn, and here's my personal LinkedIn profile. All right, guys, so we're going to go ahead and get started. So this is what we've got going on today. It just came out. We just got April's data. So all of the data that came in from the end of April just came in, and median home price came in right at $430,000. Now, why is this important? Well, a lot of people are wondering, is the real estate market going to crash like it did in 2008? Are we going to see the same thing that happened in 2008? And I would just, for starters, say no. This is a very different, these are very different conditions than what caused the real estate crash in 2008. Do I think there is a probability of having some pullback? Well, yes, I was saying that, November October last year. And you can see even into November, October, where were we here? We were starting to drop September, October, November, all the way down into December. We saw a low. So has the market corrected a little? Yes, absolutely. For all the real estate agents out there that were thinking, oh, everything's fine. I mean, it actually does depend on your state. And we're going to talk about that here in just a little bit. I found a really great article that kind of elaborates on this. But for the most part, nationwide, homes have dropped. And here in Utah, where I live, homes have been dropping, and it's been pretty similar to the national average. Now, have things rebounded? Based on this chart, absolutely. You can see 1, 2, we're in our third month of rebound. But look at how small it is, guys. Look how small this rebound happens to be. It's not that big. And this is the type of rebound you typically see between March and April. So just go back to let's go back to normal years, like 2020 or 2019 would even be a good time. You typically see a climb from March, as you can see, April, and then May. And then what typically happens after May, it's like the grass comes out, right? Or before May, the grass comes out, the flowers come out, everyone's like kind of hot to buy. And it makes a lot of sense. Snow's covering, people aren't in the mood to buy, they kind of hunker down. It's kind of that caveman mentality that happens. But as soon as things get warm, it's like building projects get finished, homes sometimes get done, and people are typically looking to move early spring. Now, what happens after summer is we typically see this drop. And that's what is the standard trend. You're going to see prices go up, and then prices come down. Prices go up, and then prices come down. And over the last, this is from 2018, or the last 5 years, the trend has been generally up. Last year, guys, 2022, look at the insane climb due to inflation. And you guys all know this. Last year, the inflation was just rich. Once inflation peaked and we started hitting it with interest rates, what happened? Well, easily said, interest rates went up, ability to buy went down, right? So your ability to go out and get a mortgage bought you a smaller house. And so obviously the mean listing price had to drop to accommodate your buying power in the market. Because what you could buy for, let's say, $3,000 a month got you a much bigger mortgage and a much bigger house compared to today. Now, this climb that's happened here has nothing to do with that. Has nothing to do with the drop or rates dropping. There has been no rates dropping. You could say that this might be somewhat inflationary, or it might be somewhat reactive to limited supply of homes, and also kind of the spring fever that we typically go through. So don't get so hot on this chart. I'm going to show you some other charts on here that are really grabbing my attention right now. But before we do, I'm going to go through kind of what each of these charts are. So I would just say this is kind of like a follow along video. Get this chart up, put it on a second screen, or follow along on your own screen so that you can kind of click through these tabs. And then the next Friday that we're on next month, you'll have this open. I'll actually have it live. This will all be updated even before we get on Friday. And I'll just kind of pick out my highlights. And I hope that you guys put comments in. You guys reach out to me on LinkedIn and find little nuances, things that you'd like to hear about. Because I study these charts like I live and breathe by this stuff, guys. This is the stuff that I love doing at night. So let's talk about ALP. So this is average listing price. You can see average listing price actually has gone through kind of these sideways waves since 2001. This does not mean what they sold for. It just means what the listing price is. And this is a fascinating chart because listing price is at like all-time nationally high. So you could say like real estate is recovered based on this, but this doesn't mean that they've sold. If you look at price, I'm going to skip one. If you look at price reduced, you can see we went through this massive climb, one of the fastest climbs, by the way, in price reductions since 2018. We had this like massive climb that happened then also. But this massive climb in prices being reduced, meaning like if I had a house for $250,000, I dropped it $50,000, that would be a price reduction. And we saw tons of homes have price reductions as interest rates started to climb. People got scared and were like, oh, we got to sell this, we got to sell this. And what was happening is people were buying or applying to buy for a home and then they weren't getting approved. And so the person selling was like, oh my gosh, people aren't getting approved. We got to drop the house on price so that this thing moves off the market. The other thing that was happening during this climb is if you look in one of my charts, which one are we looking for? Not pending ratio. Oh, it was new listing. The amount of new listings and total listings during that time, so you can see this chart right here, total listings, we were going through this like curve where it was like just the amount of listings was dropping, and then we broke out of this channel, and right when price reductions were starting to happen, skyrocket, we also started to see the same thing with total listing counts. The same thing with days on market. So here's median days on market. During that same time, median days was dropping, and then look what happened. It just skyrocketed. In fact, it hit like an all-time since 2020 high. So a 3-year high median days on market. It's kind of back down, but this, again, not compared to the last 2 years. This is the base, guys. This, I would consider this month and next month. See how it kind of shallows out here? This is kind of the base for median days on market. So how long a house sits on the market. So let's just go back to this. I want to go back to average listing price. So average listing price is showing like, okay, like we've got some houses on the market. They're obviously listing at an average higher price than normal, and it's kind of at this all-time high, which might be influencing days on market. Then you've got this price increase count. So you've got this small, and that's really an interesting data point. You're seeing this small reach in price increases. And then price reductions in the last 3 months have actually been going up. We've been seeing a slight tick up in people having to lower the price of their house. And why? I would say that the last 5 months, these 5 stars you see here, are those really small incremental rate increases that we've seen in interest rates. So if we see another rate increase, do I expect this to go up? Yeah, I do, which would mean that prices would start to come down a little bit more. Now here's mean listing price per square foot. And I love this chart because sometimes what happens in the market is you'll get a certain sector of the market that gets hit really hard. And so like the bigger houses will become better deals, or the smaller houses will get more expensive. And so this takes the median listing price per square foot. And so this gives you an idea like how much per square feet in buying power you're actually getting. So I really love this chart. And you can see that it looks a lot less aggressive than our median list price. So this is actually a better chart for an accurate reading of like, where's the real estate market going? So far, all things pointing in a good direction. Although, again, big hills and valleys, big hill valley. Look at how we're not getting the climb that we had in the last, I mean, look at how steep this was, guys. 1 year, 2 years, 3 years, 4. So this is looking a lot more like 2019, guys. And this could be the beginning of something that starts to tip. So you heard it here first. If the real estate market's going to start to drop out, and it is my personal belief that we probably hit all-time highs for the next 2 years. Meaning like next year, we're probably gonna see these ups and downs again, but overall, it's gonna kind of start waving into a downward trend. This is a good sign of that. This is actually indicating, based on the slope, that we are not gonna see anything like we saw the last 3 years. This is definitely becoming more normal. You could see how it kind of came up. If we're lucky, it'll go sideways. 2019, it went up and then started dropping. What we don't want to see here in the housing market is this thing starting to go steep. If it does, if this has the same kind of slope we had last year, guys, we are going to have lower housing cost prices, like the total cost, not your mortgage payment, but the total cost of houses we should see actually drop. All right, let's talk about the pending ratio. Pending ratio is a really great ratio. It compares new listings, so like how many new listings are available, so like total listing counts, versus the ones being sold. So the pending ratio is like how many houses are like getting ready to sold versus how many are on the market, like how many are out and available. Well, you can see that it's not quite 1-to-1. When it was over 1, and this is when things got really steep, there were more houses selling at a rate faster than we had them coming onto the market. You come back down into this 0.5 range, this was more houses being listed than pending and sale. So you can see that we're starting to climb back out of this. But again, and this is a unique curve. This looks a lot like 2020's curve, which could mean that we see just this squeeze on houses. And anytime you see a squeeze on homes, or you see like supply of anything start to really diminish like this, what happens, guys? Prices have to go up. There's just no way. And I'm asking myself how. But I am going to say this one thing right now. There's one indicator that I would be watching really close that just hasn't come into the market to really affect things, and that's unemployment. So if you're looking at these charts and you're going, Matt, it just feels so overbought. It feels like this market just can't sustain itself. I would actually agree. These are just the charts for real estate. But when you add in a chart from like unemployment, we're at the all-time lows in unemployment. Meaning like you just can't be this low forever. It has to come back up. It just historically has over the last hundreds and hundreds of years. So to say that we're going to maintain the lowest level of employment while going into a recession, I just don't think that's feasible, guys. And this week, we actually saw unemployment numbers come in worse than expected. So guys, I would not be counting on this being a rebound. I would not be counting on your equity in your home going up much higher. I would be holding on a little bit and strapping on to any reserves and cash that you have, because again, my forecasting is unemployment, as it rises, it's going to squeeze people's ability to make their mortgage payments. And then when they have to sell and they go on the market, we're going to have more supply. And then when people try to move into something new, they're just not going to be able to. And what's going to happen, this is a big one. What's going to happen to all of the people who have second homes that are servicing Airbnbs and VRBOs? Well, when unemployment is this low, people are still vacationing. We're seeing consumer spending still really high. It's why inflation actually hasn't dropped that much, is people are still spending all this money. There's so much M2 out in the market right now. But what happens when all of that starts to crunch down, unemployment starts to creep up, and these people who have a vacation rental that only makes the mortgage only makes sense because they have vacation renters in there, what's going to happen when they have to either try to rent it and the rent they get from it won't even pay the mortgage? They're going to have to let them go. And so I actually foresee maybe a small foreclosure bubble in the VRBO Airbnb space. That could be a place that it pops depending on how much equity are built into those projects. But when they have to sell, they're going to have to sell at a discount, because as supply comes up, they'll have to start discounting the price to get those things to move, especially if it's a vacation rental. All right, let's talk about new listing count. New listing count does not support my theory. We went really low into new listings. In fact, like an all-time low nationwide. Now, the state of Utah does not look like this, by the way. A lot of those overcooked markets have a lot of new listings piling in. But you can see the last 1, 2, 3, 4 months, we've had a significant rise in new listings. But if you look at the last 1, 2 normal years, I would say 2018, 2019, they're not as high as they were in those 2 years. So that is concerning to me on supply. It means there's going to be more demand, less homes to actually sell, which will bring me some points that I'm going to bring up here in just a minute. So there's new listing count, active listing count. Now this is an important number because you have new listings, but if the length that a listing is staying on the market maintains, the overall listing count is going to be high. And that's what actually makes this chart really unique. So listing count was dropping, right? And we may have actually hit our low in 2022, meaning that's the lowest amount of active listings we may ever see again in the US economy. So what does that mean? The more you bring into the market, the lower the prices should start to drop. And sure enough, listings have been coming up, and we have been seeing price reductions. We have been seeing kind of this lull. But overall prices are still on this trend to go up. but this is a good leading indicator that that may end soon. And look at how quick. This does not normally happen, guys. Active listings typically are dropping right now. Like, let's go back to 2018 and just check the months. So you've got active list. Oh, right. You got active listings. They're going to build until about June, July, and then they're going to drop off. Excuse me. I want to make sure I correct myself there. So you're typically going to see these going up. But what happened is this is like a weird lull. We had this like active listings took a while to start to kind of lift again. We're already into March. Where in March here, we were already in a climb. In March here, we were already in a climb. And so this is lagging just a little bit to normal. But I would imagine winter to spring is when people start listing. And it's just the most bizarre thing. The homes sell the fastest in the spring. And then people start listing more through the summer and the fall. And that's actually when you'll actually see the prices drop. And it makes perfect sense. The more you have on the market, the more the house prices have to drop. So just a little tip, if you're thinking about buying just from a trend basis, wait till the fall or maybe even winter, because you're going to get the most inventory, the most houses to buy for the lowest price in that year. And that's a very common trend. If you're thinking about buying now, why not wait? Interest rates are likely not going to go up that much. They're only going to probably go up another quarter point by the end of the year. All right, let's talk about total listing count. This is basically the same, very similar chart as active listing count. But total listing count, you can see is more sideways. And we are back up. We are off of 2022's low. There is no way we're coming back to that in this year. And total listing seems to be taking a new trend up, which would be good if you're looking to buy. It's going to start dropping the prices. Pending listing count has come up, but it hit an all-time low in January, guys. We're talking like a 4-year low. So this is houses that are pending to get listed on the market. So these are homes under contract. So the houses that are currently under contract were just dropping, and it makes a ton of sense. I've actually heard for the first time in a long time, people that were buying the house and then didn't get approved by the bank. And so as the banking crisis continues, are banks going to be a little harder to get loans from? Absolutely. Is that going to hurt the pending listing count? Yes, but we did see a spike back up. Pending listings started to go back up, which means homes are getting sold, but it makes a lot of sense because we're coming into the spring and summer months. All right, let's talk about median square feet. So this is the median square feet that's selling. So this is a fascinating chart, and it makes a ton of sense. Through 21 and 2022, the mean square feet started to drop, and now we're starting to see it climb back up. So median square feet is how many square footage is being sold nationwide, and you can see that is actually starting to tick up. And that's common when prices get better. When prices get really tight, people can't afford as much, and through 21, 22, the top of the market, people had to buy less home. Yep. All right, last chart, median days on market. So this is the median days that a house nationwide is on the market. And this is just a great chart because it has you see, like, if I put a house on the market, what's the average time it's going to stay on? And you can see it, guys, again, 4-year high in January, 75 days. So if you had listed your home, 3 months before, 2.5 months before, it would take you 75 days to close. The days of COVID, when we were down to 20, it was like a house would get listed and then it went into closing. Like that's a 20 days on market, because it just takes all that time to go from beginning to end, take up backup offers and so forth. Those days are clearly over. We are hitting the bottom of this. It looks like 50 is going to be kind of the new norm, and we should hopefully start getting back into these 75 average days from like a 65 up to, upwards 80, 90 days on market. So this will, as this starts to creep back up, this should also help the housing market in terms of price. But again, not a great time to be probably investing yet. There's going to be a better time to buy. My prediction would be in the future on this. Now, again, here's all the data. Just as a source of reference, realtor.com is where I get all my data. So if you want to check my data or you want to make sure or build these charts on your own, you're welcome to do that. It took me a lot of time, one, to build the charts, but also to curate the data that I wanted to see. So you don't have to do that anymore because I'm giving it to you for free. But if you want to do it on your own, this is where I'm actually getting the data from. Now let's move into this next piece. And I think you guys are going to find this interesting. I want to talk to you. So now that you've seen the charts, there's kind of mixed feelings about the real estate market, right? We've got like active listings are starting to creep up. We're seeing days on market definitely coming up. Price reductions are starting to come up a little bit. But then overall median price is going up. So it's like we have these contradictory indicators happening in the real estate market. Well, this one here is, I don't know how you could read this any other way. This is lumber costs, guys. And lumber costs are often a great indicator for what's going to happen to build a home, right? It's like one of the key ingredients to building and making a home is the cost of lumber. And why would you buy a house when you could build for less? Well, it wasn't that way. And it definitely wasn't that way when we were hit almost $1,700 for 1,000 board feet of lumber. 17, guys. And then COVID hit, lumber dropped. It just like hit a tank, went to about 400. And then depending, for any of you who are building, you know how much of a mess this was. Then it spiked again, hit 1,400. And now, guys, we are at 345. And I have seen charts and people that are predicting that this could go as low as 280s next year. So if we have prices start to return to all-time let's even go 10 years, guys, on this, even possibly 10-year lows, why would you buy a house when you could build for less? And that brings me to my next chart that I think you guys are going to love. This already exists. I found this article. This is actually really recent. It was February 2023. The data has actually even gotten better. So if you check it up to this month, there are actually states now. So the states that it's cheaper, it's even more cheap. And there are actually more states now that it's cheaper to build than it is to buy. But let me share this with you just in case you're one of those states. So here's what the research showed. And they actually even gave some dollar examples. So they said, due to the steep rise in home prices over the past few years and the limited inventory of existing homes, building may be more attractive option for a growing number of Americans, meaning it would be cheaper for you to build than it would be to buy. And guess what? I live in one of those states, Utah. So here are the 10 best states for building based on the difference in cost compared to buying. Hawaii, their building costs are $494,000. So this is almost $500,000 less than buying. So if you could build, it would actually cost you about $500,000 less than buying. In California, the average is $200,000 less. In Colorado, $108,000. Utah, $97,000. Virginia, $96,000, and so on, all the way to Idaho. It's cheaper to build than it is to buy, which makes sense. Lumber costs are going down, but not just that. You guys remember how crazy it was to buy an appliance 2 years ago? How the prices were through the roof to get like anything done in your house, the cost of service to like get someone to do the paint, to do the floors. Well, all of those are starting to drop when the prices were locked in really high and really low rates. So that demand is going to put a lot of pressure on people who bought homes a while ago, and it's actually going to be cheaper to build. Well, this isn't the case for all states. We want to keep in mind that in some states, and these are 10 states that are the opposite, but actually some of them have diminished quite a bit, it's actually the worst. So here are the 10 worst states for building, meaning the median price home costs less than building a similar home. Pennsylvania, it's $183,000, almost $200,000 more. So it was cheaper to buy an existing home in Pennsylvania than it was to build. Ohio, Illinois, Maine, Iowa, Missouri, Michigan, South Dakota, Indiana, and West Virginia. And all of them are over $100,000. So if you're thinking to buy in any of these states, do not build. That's what this is saying. Now, these numbers are diminishing now as lumber costs come down, service costs come down. But you're going to want to look at this because in my opinion, if you're a first-time home buyer or you're looking to move into your next place, building may be the best option. And I would go talk to a contractor before you go make a decision. And my prediction is both, by the way, are going to drop. Both building and buying and existing. So keep an eye on this. We'll see if I'm right. But I think regardless, the trend's heading in the right way. And for those of you who are looking to build in these states, well, you're in luck because it is actually cheaper, especially if you already own the land. So guys, that is the wrap up, and I'll call this the recap of our real estate forecast Friday. And this is fun. We'll do this every first Friday of the month, and basically I'll just keep bringing to you the latest data in real estate so that whether you're a real estate agent, an investor in real estate, someone who's thinking about buying their first home, you will be the first to know what's going on, and you'll be able to take this data in and make a decision for yourself. What's really going on in the real estate market, and is now a good time to buy? And maybe even more importantly, is now a good time to sell? Thanks again, guys, for being with me, and we'll catch you here on the next Trader Pulse podcast. Thanks so much.